Hello traders, Gary Wagner here, just about 10:40 in Honolulu, 3:40 in New York. It is Thursday, January 14th, 2016, and this is the daily report for gold and silver. We have the precious metals complex mixed, but gold and silver under pressure, gold under tremendous pressure, trading off about 1.2% on the day, or about $13 in terms of the drawdown. Currently trading just at 1080, 1079. So it has come off the lows at 1071.65, high 1095, nowhere near that on the day. Some critical levels that we've talked about is exactly this 1080. We can see that on this daily chart. Let me go ahead and blow that up. It's a simple line chart, but as you can see, we've got our basic fib retracement level in here, going from the top at 1171 down to about 1046. When we do that, our 23% retracement level comes in at 1080. So that's absolutely a line in the sand, and we want to see how the market reacts, how it closes, if it can find support in this area, or if it breaks through. Because whether it breaks through or not is going to really determine our forecast in terms of where we think it could go to the upside if we see a bounce. In other words, we just had a rally, now we're having a correction. Will we go back into rally mode? So considering that this market has just shown a pretty dynamic rally, which really began mid-December at these lows at around 1045 and then came up to 1113 as a intraday high in the market, and that came in, of course, right at the beginning of 2016, there is a case that can be made for a bullish model, but to do that, we really want to look at a new fib retracement level that we have just added. And this fib retracement, rather than covering this long move from 91 down to 1046, our low is 1046, and we're taking it up to the top of the rally at 1113. And of course, when we do that, we get different levels, our 23%, 38%, 50%, and then 61%. Now, interestingly enough, 23% retracement at 1080 has a harmonics, and that harmonics, of course, is this 50% retracement that comes in roughly at the same area. I think it says 1079. The line is going right through that, so I really can't see. So that's going to be a pretty important level, but here's what I wanted to show you, and that is that we had a nice rally moving the market, as I said, from approximately 1045 up to 1113. Now we've seen a 61% retracement. That comes in at 1071. That also matches the low that we got today. So there can be a bullish case made for the fact that we have seen basically a rally, 61% correction, and then a return to the rally, so that we can absolutely pull out a bullish model on this on a technical basis. So traders, this last decline in gold was precipitated by a number of things. Fed statements that in essence are stating that they are on track to do at least another 2 or 3 interest rate hikes. My sense is that over this 2016 calendar year, we'll probably see possibly another 3, and the net result will be the interest rates being risen by a full percentage point, a quarter tick at a time. Dollar index up nominally 0.17%, so almost 0.2%, but it is above 99. We talked about different levels of support and resistance within this market. Specifically, we spoke about the fact that 98.90 on a technical basis was a form of resistance as this market came up, as you can see, but we noted over the last couple days that we were actually seeing closes above that. And so I really am pegging our current resistance up at around 100. We're not that far away from that. The reciprocal is true about the euro, and that's what we're seeing at the lower end of this screen. We are currently just under resistance, and resistance comes in roughly at 109 in terms of the marketplace and the numbers themselves. So traders, as far as other markets that we are looking at, crude oil is trading higher on the day, back over $31 per barrel, up about 62 cents on the day at 31.11. Now, the low that it hit, which is 30.28, is still just above the most recent lows that we have seen. If we look at it in terms of some of the longer term charts, we can see we're still headed under tremendous pressure. I draw your attention to this simple daily chart. Let's go ahead and blow this up a little bit. And on this daily chart, we basically added a cascading bear channel. Of course, the market has been down, and this is our bear channel right in here. And my sense is, as you can see, we see pops up to the top of this channel, even exceeding it at this point. Then we had a market move down. These are the most recent lows, taking us below $30 per barrel. And when we look at our chart, you've got somewhat of a three-river morning star, but all I'm looking for this market to potentially do is trade back to the upper levels of this channel and then track lower. I think oil will probably stay under pressure. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.